Hi there. SOFI Technologies has declined by over 28% year to date. This is not a great performance, but when you look at this company, you can see that SOFI has become profitable. As you can see here, contribution profit. This company has succeeded to make a profit, because if you look at the past, you can see that they had only losses. But now this year 2024, they reported a nice profit. Over 200 million contribution profits. And that's great. Moreover, if you look at their members, you can see that they have increased to over 8 million in Q1 2024. So this is a great improvement. And they expect another 2 million to add this year. So this number might go to over 10 million by the end of this year, and that's great. Also, their products has increased, but this is not quite an important indicator. Only their members, their depositors, and their users, Galileo accounts, that uses their technology. And as you can see, they have over 151 million Galileo accounts. This number have declined a little in the past, in 2020 and 2023, as you can see here, from 141 million to 129 million. But then this number has rebounded to over 150 million Q1 2024, and that's great. Plus, you can also look at their guidance for the next quarter, Q2 2024, and they expect another profit. As you can see, their GAAP net income to be about between $5 and $10. And the full year guidance for 2024, their GAAP net income is expected to be between 165 million or 175 million. So this is a great improvement compared to the last year when they reported a loss over 300 million. In 22, same thing, over 300 million. And in 2021, a loss of almost 1 billion. So this company has become profitable. Their earnings are expected to grow more in the future, and so their revenue from 2 billion to over 4 billion. So this is great. But as you can see, the stock price is still down 28% year to date. Of course, from its highest peak, when the stock price was about $25, the stock price is down over 72%. And this is a bad performance, especially for investors who bought at the highest peak, when the stock price was about $25 per share. But as you can look at this business, SOFI Technologies, the market cap is about 7.3 billion. And if you only look at their balance sheet, you can see that this company has 3.6, almost 3.7 billion in cash and cash equivalents, plus some restricted cash of over 400 million. So in total, they have 4 billion, over 4 billion. Plus you also add their investment securities, over 900 million. So in total, if you do the math, this company has 5 billion in cash, plus investments. And this is great, 5 billion in cash. And when you look at the market cap of only 7.3 billion, is more than half of their market cap. And be aware that this company has also profits. Their contribution profit has improved to over 275 million. And this is great. If they can achieve, as the market expect, over 600 million in profits, and you also add their cash position, then this company is doing quite great. Of course, they need this cash because they have some requirements. A US bank might respect the rules to have liquidity. Of course, if you look at their debt, you can see that is around 2.8 billion. And if you subtract 2.8 billion from their total cash and investments, then the final net cash position is about 2.2 billion. Now, when you want to invest in a company, it's great to look at their cash and their debt, not to have too much debt, because if they have too much debt, then they won't be able to pay the interest, especially if a company doesn't have profits. But as you can see, this company is profitable, they have cash, some debt, and they expect more profits in the future, over 100 million for 2024, plus their members keep growing. So this company is doing great for the moment. As long as they attract more users, members, and their deposits increase more in the future, As you can see here, total deposits are over 21 billion, 21.6 billion. This is an important indicator because if they can attract more users to deposit money into their accounts, then SOFI can lend this money to other people and they can earn a higher interest. And that's great. As you probably know, SOFI has three main segments: lending, technology platform, and financial services. And as you can see, the largest segment is lending, which reported a total revenue over 300 million. Then technology platform over 94 million and financial services over 150 million. So the largest segment is lending. That's why total deposits, as I said, are quite important for SOFI, because the more deposits they have, they can lend more money to people. And as you can see also, their contribution profit is the highest compared to the other two segments, technology platform and financial services. Then, technology platform, as you probably know, they provide the infrastructure plus other software services to different financial companies. And so far, the net revenue is about 94 million. And most important is that they reported a profit, and that's great. Then they have financial services where they offer more services. For instance, SOFI Money, SOFI Invest, SOFI Credit, SOFI Rely, and other products like this. And based on the fees they earn and other services they offer, they make some money, which is the second largest segment of SOFI. And it's still profitable. The margins aren't that high, but it's a good segment. They earn some money. So, as you can see, the company keeps growing, they become profitable, and the market expects more revenue and profits in the future. Now, there is also risk, and that is their loans, because as you know, they have some deposits over 21 billion, but they also lend this money. And their loans, as you can see, held for sale, are over 21 billion, something like that. And if borrowers face issues, they default on their debt, then that will be a loss for SOFI, because they took the risk. Besides this, you also have to be aware of dilution. As you can see here, the number of shares has increased from over 929 million to over 982 million. And this is bad for investors because if they keep issuing more shares, your value decreases over time, because the earnings per share decrease when there are more shares outstanding. And that will be bad in the long term. And of course, if interest rates decline from 5% to less, let's say 1%, 2%, then this segment, lending, will decline in value because they will earn a lower interest rate. That's why you have to be aware also of the risk, not only on the reward. So far, this company has profits. The market expects more revenue in the future and profits. So if you want to invest in this company, you have to be aware of the upside and the downside. The upside from the current level, you might have a double if this company keeps growing. But there is also the downside. That's why you have to be aware when to invest in this company. And a good indicator is the price to book ratio. When it's below 1, you can take advantage and invest in this company, as it was the case in 2023. When it's higher than 1, then you might wait for another decline in the stock price. And as the stock price has declined by over 43%, and you believe in the future of this company, it might be a good opportunity for you. But be aware that this company can decline even more due to higher dilution, a decline in interest rates, and of course, defaulting. So it's up to you if you want to take this advantage or find other investment ideas. And if you have other questions, then please let me know in the comments.